Welcome. Now we will come to know about high beta high dividend paying stock, that is PFC, and low beta high dividend paying stock, Pfizer. So what is the return comparison? This is part 5 dividend paying high dividend paying stocks. Welcome to GB Investor Zone. I am Ganesh Babu. At the end of the video, you will know how to maximize your dividend yield, volatility, how to use your volatility, and how to book profit and exit. Disclaimer: I am not a SEBI registered share market consultant. You have to take your own call. So volatility. PFC, it's I beta 2.41. So it is very volatile. That we can use for our best returns. Pfizer, that I will explain. Only low volatility, low beta 0.47 only. PE ratio, PFC very low, since it is a government company. They give loan to power companies. So basically they take cash from government and give it to disperse the loans for power companies. So basically risk is very less. Pfizer, it is a pharma company. So dividend yield PFC 4%, Pfizer around 1%. So last 12 dividends, if you see, PFC share 3 rupees, 4 rupees, 3 rupees, like that they are giving. So in 1 year at least you can get 2-3 dividends regularly. So high dividend paying. Also whenever they give dividend on that date, it will fall by 3 rupees or 4 rupees equivalent to the dividend amount. On that day we have to make some entry, because straight away it will fall for 3 rupees. So on that day we have to make some entry. This is one idea for high dividend yield. Like that, Pfizer, if you see, dividend yield 3.47%, beta value 4.47. So it will not move too much. Dividend, sometimes they pay very big dividends. Say recently last year 130 rupees they have paid, then 35 rupees, 5 rupees, like that they are paying regularly. But and stock performance, 1 month 1% PFC plus, Pfizer minus 5%, 3 months plus 22% PFC, very volatile. But Pfizer minus 7%. Similarly, 12-month PFC is very less, 2% return only, but Pfizer 18%. 24 months both are positive, PFC 14%, Pfizer 24%. So for low risk investors, Pfizer is suitable because it is a defensive tech sector pharma, good balance sheet, valuation moderate, steady returns. But for high risk income investor, it will be better they go with PFC. Even for low risk investor, if you follow my strategy, the risk reward will be good. That how I will explain now, based on the swing trading investment strategy. If you see this sale chart, if you want to take entry or exit, it will be difficult. But if you see the bottom here, there's a channel running. The channel I will provide for your benefit. So whenever swing bottom the price comes, we have to enter, and middle of the swing also we can enter or exit, and top end of the channel we have to only exit. So premium zone is above the middle end of the channel, and top end of the channel premium zone, there we have to look for exit only. Discovery discount zone, it below the middle end of the channel, and bottom end of the channel discount zone, where we have to look for entry. Top end we have to exit, that is premium zone, we have to look for exit. But high risk investors, they can take entry. That I will explain now. This is color code, this is stop loss setting line. Before that I will go to the charts. Pfizer is a MNC company, they regularly pay dividend, and good dividend yield also they are having. So presently if you see the trend, the trend is short-term trend positive. This is the trend line, short-term trend line. It has taken support and bounced back. It is now just taking support at my middle end of the channel. So this is what premium zone, that is middle end of the channel up to top end of the channel is a premium zone, where you have to look for exit only. But high risk investor, if there is a bounce back from the middle end of the channel, they can take entry. But if you see the overall trend, it is coming down only. You can see it is the channel, it is coming down only. So it's a downward channel. Within that downward channel, it is going up and down. See, you can see up here, bottom end of the channel 4100, top end almost 5000. So 1000 rupees range, this is the range, swing trading range. So now we will see the supports. Below there is a stop loss setting line. What is stop loss setting line? Means it will eat your stop losses. Also another definition, stop loss setting line, this black line, the price will revisit many times. It may take 1 day, 1 hour, or 1 year or 2 years also, but again definitely it will revisit. This is multi-month stop loss hunting line. This is multi-week support line. This is multi-week gap line. So as I told, bottom end of the channel. High risk investors, if it comes, either it should break here. This is under support line, trend line. They can take entry below this one, middle end of the channel, bottom end of the channel. It will be better. Stop loss will be supports. If it gives a breakdown with big candle high volume, then that you can keep it as a stop loss. Above, if you see, this is the another multi-day stop loss hunting line. This is monthly resistance, multi-month resistance line. There will be heavy supply. Whenever you see at the time when the price goes and touches there, the supply of shares, the volume of sellers will be increased. You can go and check. And there's a gap line above. Then this is the top end of the channel. In case it gives a breakout above the top end of the channel, it may go and touch 5,282 Pfizer. So as I told, presently market due to Iran war, it is weak, but still it has not fallen too much. So this is the middle end of the channel. Then it may come and take support here. So it will be good. Better wait and have entry in the discount zone. Now next we will see PFC, which is very high beta stock. And before that, as I told, this and all stop loss hunting line, you can go through slide by slide and you can understand. And how to take entry, I have clearly step by step I have written. Now we will see PFC share, where to enter and exit. If this video is useful for you, then only you can subscribe and like. And again, if you come back to refer my levels, at that time kindly subscribe and like without fail. Definitely this will be very useful for you. So now you can see PFC share. You can see PFC share. It is in the uptrend, very highly volatile. Presently it is taking a short term trend support line. That if you see the channel, you can see upward channel. This is the rising channel, bullish channel. Previous Pfizer, it was a downside channel. So now what happens, it is just given a breakdown below my middle end of the channel and taken support at the short term trend line. And you can see the stop loss hunting line, multi-month stop loss hunting line. As I told, it will revisit multi-month. Whenever there is a stop loss hunting line, definitely price will revisit. Below again there is a multi-day stop loss hunting line, PFC. Again there is a gap line, it will be a gap. Then again there is a stop loss hunting line, black line. Again several supports, multi-week supports, multi-week stop loss hunting line. Again there is a gap line. Again there is a multi-week black line, stop loss hunting line. So now it has taken support at the multi-month black line, stop loss hunting line. So as I told, this is the multi-month resistance line. Actually this video already I put as shorts yesterday I prepared. Now you can see from that multi-month resistance line, it has come down. So again above there is a multi-day resistance line, and again there is a mini stop loss hunting line. So if it gives a breakout or gap up above this resistance line, then it may go and touch the top end of the channel. The range, if you see, bottom end 390, top end 445, so 55 rupees. So as I told, since now it has come enter into the discount zone, you can look for entry. Low risk investors, as I told, low risk investors, they can also take exposure to high beta stocks like this. When it comes to the bottom end of the channel, already it would have fallen by some 20-25%. Again there is several supports are there, so you can keep your stop loss properly and exit. So the risk reward will be high when you enter at the bottom end of the channel. That I can explain. You can see this is the bottom end of the channel, 359. So from 359 it has gone to the top end of the channel, 423. So you can see middle end of the channel, it has taken a support. So again it gave a breakdown, came just touched the bottom of 384. Again it went almost to 436. So this is the way low risk investor can take entry at the bottom end of the channel, PFC, so that their risk reward will be high. So now as I told, it may go and touch, if it gives a break out above this multi-day resistance line, it will go and touch the top end of the channel. Again there is a multi-week resistance line is there. Again there's a gap line is there. So it may go and touch above the top end of the channel at 473. Again there's a multi-day resistance line. So in this way, even low risk investors can also take. High risk investor, it is up to them. Even here also, again there is a, they can take entry at the premium zone also. So as I told, please like and share and subscribe. This will be very useful for you, the too, especially for people who and all want to have short term and swing trading strategy. Nowadays, it is better to take profit then and there, either 5%, 10%, like that. You have to set your goals as per your wish. Nowadays, you should not hold your investment for 2, 3, 4, 5 years and all. Then and there, it's like a fast food. Thank you. Please subscribe.